So let's keep track of where we are in the process. We started out by looking at some business transactions and recorded some journal entries. We then posted those journal entries to the general ledger, created an unadjusted trial balance, have analyzed the accounts and made all the necessary year-end adjusting journal entries. We are now at the point we need to create an adjusted trial balance, which is then going to lead into our creation of our financial statements and our closing and our financial statements primarily, and then we'll do a closing entry to wrap it all up. Now, technically, what I should probably do with my adjusting journal entries, I should probably post them to each one of these T accounts, each one of these ledger accounts, so that the balance in the ledger account remains in balance. And again, you would do this. I'm not going to show that here because I think this is fairly tedious. I think everybody understands this, and actually I don't have any more room on the screen. So what I'm going to do is basically show you how it ends up looking actually, which a lot of times you'll see the unadjusted trial balance, and then you'll see this, what they call the adjustments, and they'll put the adjustments in a separate column over here. And so we'll have, for example, let's just walk through these adjustments to the interest expense account. Sorry about that. So we had the first one, we debited the interest expense for $1,200. I'm going to change colors here. Let's put all the adjustments in purple. We had $1,200 to interest expense. That was a debit. And we credited interest payable. And that was above the loan, so it should be right here. I know the lines are a little bit off, but humor me a little bit. The depreciation expense number down here, we're going to debit $4,167. We're going to credit two amounts. $1,667 is going to be credited to accumulated depreciation equipment, and $2,500 is going to be credited to accumulated depreciation van. Okay, and so these two, this 1,667 and the 2,500, total up the 4,167. The next journal entry we're going to make was to insurance expense, and that was $450. And that was a debit, and then we're going to credit prepaid insurance, $450. So the prepaid insurance account. And the last adjusting journal entry we need to make is to unearned revenue. We are going to debit our unearned revenue account for $3,000, and we're going to credit the revenue account for $3,000. Now, if I add all these up, they should total up and should be equal to each other, and it is. It's $8,187. 87. That's a 7. And that's 8,187. So it does total. And these are my adjustments. Now, the last piece then in the process is to create the unadjusted trial balance. And all that simply does, and I'll change colors here one more time. All that does then is add the debits here, adds the debits and the credits, and adjusts them by the adjustments to come up with the adjusted trial balance. So if we walk through this, our cash account, we're going to have $44,400. We're going to have $1,000 in our receivables account. We have $80 in our supplies inventory. In our prepaid insurance, which again is going to be affected by the adjustment, we have $1,350. And so that what we're doing is we're combining these two accounts. In our equipment account, we have $20,000. we have, and that's a debit, but now we're going to have a credit of $1,667 for the accumulated depreciation so far on that equipment. We're going to have $50,000 in our debit for our van, and again, we're going to have $2,500 credit in accumulated depreciation on that van. Our accounts payable account, we have $700. Our unearned revenue, we're going to take this credit balance and we're going to put a debit up against it. And so we're going to end up with $6,000 in that account. Let me run a quick little demonstration for you here. So originally we had we had 9,000 in that account because unearned revenue was a credit balance. We debited it for 3,000. And so we're going to have a credit balance in that account of 6,000. And you can see I've even got it on the wrong side here. So let me erase it and put it over here. And I've got my accounts payable on the wrong side too. Sorry about that. So accounts payable was a credit for $700. So now I think I got everything in order. So that's my unearned revenue. My interest payable was $1,200. There was zero in the beginning account, but then I picked up this an additional $1,200. I have the loan payable of $60,000. I still have my common stock of $40,000. I still don't have anything in retained earnings. In revenues, I now have $15,000 after the $12,000 unadjusted with the additional revenue I recognized for the services I performed. I have $4,000 in operating expenses, $420 in supplies expense, $1,200 in interest expense, $450 in insurance expense, and $4,167 in depreciation expense. If I total up these two columns, they should equal one another, and I believe the balance is $127,067. So what we have done then is created the adjusted trial balance, which is the starting point for creating our balance sheet, income statement, and statement of retained earnings.